Hello and welcome to the week ahead from gloomy California. It's currently Friday, November 21st, about 6 p.m., dinner time-ish, after market close. And we had follow through on the downside after my video from last weekend. So we now have a confirmed daily downtrend. And not only that, but if you go to the monthly time frame, you'll see we have broken the monthly stair step. So you can see that right there. We broke it on QQQ, we broke it on NQ, the futures, we broke it on SPY, we broke it on S&P 500 futures, ES. So we are officially in monthly consolidation. And I couldn't be happier. So I know that it's been a rough week for a lot of people, and a lot of these down moves are, especially for the perma bulls, it's like very, very difficult and upsetting to a lot of people. And my heart goes out to anybody who's had trouble trading in the last week and has lost money. Or missed opportunities that they thought they were going to get on the way down. But I am so grateful that this is the beginning of what could be a healthy consolidation. I really do hope that that's what it is. I don't know if that's what it's going to be, but as I mentioned last weekend's video, I've already been thinking about where would I want to buy on a dip down. And, I have some spots here that I outlined last weekend that I think makes sense. I don't know if it's going to be the place to buy for a monthly high or low. But I do have plans for how I want to make buys and attempts for a monthly high or low. And so right now, because I'm actually in a large amount of a cash position going into this pullback, because I was kind of anticipating this coming, I know that when the time comes, I want to start buying in with size on my attempts for a monthly high or low, so that if we do set the monthly high or low, I'm in a good position to be continuing to add to that position on strength. So I don't know exactly where it's going to come, but I have done a bunch of research on what those monthly higher lows typically look like in the past. So I want to talk a little bit about what that looks like, and then how that plays into my approach for how I'm going to plan around capturing a monthly higher low. Okay, so here on the daily time frame, this is just a really simple chart where I've got a daily EMA 12, that's the little blue line here. I've got a monthly EMA 12, this other blue line here. I've got volume on there, and I've got RSI. And you'll see that for the most part, the monthly EMA 12 is a really good gauge for the market. It was very strongly above it over here. Then it was resistance down here until it finally turned. And since then it was, held a lot of back tests until this tariff bottom. It held the first test, and then there was more fear in the market. It pushed it lower. And now we're back up above it and coming back down towards it. So I care a lot about the monthly time frame, and specifically the monthly EMA 12. I don't think that in my brain, there's not like a magic place where you buy a high or low on the monthly time frame. Instead, what I'm looking for are the conditions in which I have a high probability of winning a trade if these things happen. And so I'll show you an example here. Specifically, let's take a look at this one right here, where you can see here we got daily oversold. One of the ideal conditions for it is that we get daily oversold. And ideally, it's more than daily oversold. It's daily oversold, and at the same time, it's many other underlying time frames undersold. So if we could see hourly, 5-minute, 15-minute, hourly, 4-hour, and daily oversold at the same time, that is like chef's kiss, perfect conditions for attempting a monthly high or low. Because when that happens, that is full-blown fear and panic in the market. So here I'm just going to say, let's look at, this is a specific condition where we had daily oversold. So let's zoom in on that one, which was here. And the one thing, yes, we're getting daily oversold. It was a multi-day drop. We actually gapped down from this day to this day, you can see. And then on that major gap down, which hit daily oversold, and actually it was so oversold that it closed below the level, that ended up being the bottom. And so that's just a really nice condition to be looking for. And then next, the other thing is I want to see a lot of space, like this big open area here, between the daily EMA 12 and price. And specifically, think about the distance from here all the way down to there. And so I wanted to sort of think about, and I actually wrote an indicator to try to help me identify what's the median of when pivots are set below the daily EMA 12 and they're close to RSI oversold in the daily time frame, record a collection of all those pivots and measure how far away they are from the daily EMA 12, and then have a median of that, and then also look at the extremes of that, like the 90th percentile and how far those goes, and look at what that looks like. So I actually made an indicator to do that. What it's showing you is The green zone here is the high of the green zone is the median of the dips that happen when pivots are being set near RSI 30 on the daily time frame, and the bottom edge of that is the outliers, the like 90th percentile of ones that go like crazy low. So you can see here, this is a condition where we're pretty far away from the monthly EMA 12, but we do have RSI oversold, but we're not anywhere near the extremes, like even the median of what you would want to get. And so when it comes to doing this kind of trade, essentially it's a mean reversion trade. I'm looking for price to get overly extended below the daily EMA 12 in a spot where historically RSI has been a guide to identifying a good location for a monthly high or low, and then I'm looking at the average moves in that range. And you can see here, it tried it here, had a wonderful rally out of that, and then ultimately came back down and tried again. And this time, when it got there this time, you can see there was a nice big space between the daily EMA 12 and the low of that day. On the open that day, it was daily oversold, it was in the extreme zone, and it was touching monthly EMA 12. This right here, even though on the daily time frame, it didn't actually get daily oversold, it didn't like record as daily oversold here on the close. You can see that it actually, during the day, it was. And so this is a wonderful spot to go because it hits three of the things I'm looking for. Gap from daily EMA 12, RSI oversold, proximity to monthly EMA 12, setting a higher low on the monthly time frame. So that is like, on that gap down, that's like, you've got to buy this. And I think this might be the Japan carry trade panic in the market that happened. And I did buy that. Didn't do it as big a size as I wanted. And then after messing that up and not getting the size I wanted, I got bigger and better size on the one over here, and I did even better. And so now I'm just kind of preparing for the next opportunity that comes that I want to go even bigger. This is something that I've done multiple times and I've done well. So I'm trying to document what are the very simple things I'm looking for, and what am I going to do when those conditions occur. And so with all that in mind, I'm going to show you the plan I put in place. Okay, so the ideal buying conditions I just talked about are, at or below the monthly EMA 12, extended below the daily EMA 12. And I've got sort of an indicator there, but you could actually, as I showed you, you can just kind of eyeball it. You can tell, how much space is there between the top of a very stretched candle and the low of that candle and the daily EMA 12 above. And then nice to have would be gap downs. Gap downs into those conditions are very strongly desired. And then finally, of course, daily oversold. And I put in here, extended below the daily EMA 12 is one of the requirements, but a nice to have would be a gap down, ideally more than one gap down. And then daily RSI oversold is one of the required conditions, but a nice to have would be super stack oversold. Like I said, you're getting 5, 15, hourly, 4 hour, and daily oversold at the same time. And that's it. I'm keeping it as simple as that. And when I take these trades, my thought process is that when it gets extended like that and those conditions are being met, there's a high likelihood not of necessarily setting a monthly high or low, but of getting a bounce from that location. And if we go back to the chart for a second, for example, here, this was a place where I think at the time I was on vacation. And so I ended up not trading until here because I was away. But if price was dipping this hard below here, this would be a day that I would be making an attempt, right? And as you can see, ultimately that didn't play out. But it's still an amazingly good location. And if you get that and you hold on for daily EMA 12 and then you sell a portion at daily EMA 12, put your stop in, who cares, right? Like you cover your risk, you end up stopping out over here on this day. And at that point, you're like, okay, well, I need to wait for the next opportunity. And it came just a few days later over here. And so I think like once it made this, again, a lot of it is just practice and like, how do you know not to buy here? How do you know not to buy here? I think for me, given this major gap down and then flushing lower and drifting down into after hours and gapping down again, like it was on, I'm not going to be silly. I can see when the market is in full panic and I'm not going to just buy that, but I can also see that my zones are drifting down here. And so on multiple gap downs, you got to make a second attempt. And just because it's historically, this was a very unique position, but I knew at the time that it was gapping down after hours here that this was historically abnormal and that the mean reversion was going to come. I just didn't know when. And so I started a scale in there and I did another one in the morning of what ended up being the ultimate bottom, and then caught the bounce and did really well in that trade. And so this isn't a trade for everyone. I'm not giving out financial advice. I'm not telling anybody what to do. I'm just talking about how I'm thinking about it and what my method is. I think, getting these sort of stretches away from the moving average and counting on the bounce to get risk free, that's my bread and butter on every time frame. It's just that on this time frame it's a little bit different, where I'm really trying to catch a swing here for longer term, and therefore it requires a lot more patience, just because of the time that you need to sit in these trades and hold the position waiting for the bounce to play out. I'm used to trading the 2 minute time frame, where you're in and out and you're risk free in a few minutes, and so this is just a different ball game. And so I have these ideal buying conditions, and that's what I'm going to look for. And I actually think that when it comes to taking these trades, I've gone back and I have examples here of different times that this has happened in the past. Other times monthly higher lows were set, and I'm looking at how exactly did they play out, and given the conditions that I'm looking for, how would I have performed if I took that trade? And that's a really useful exercise, and it's honestly what I'm spending most of my time doing right now, because I want to have considered all the things that could happen, so that as I'm sitting waiting for my trades to play out, I'm not uncomfortable. I've considered all the things that could happen, and I've actually got a plan here to not just what I'm looking for, but how I go about scaling in, how I go about scaling out. And then a mindset plan of visualizing taking the trades, visualizing feeling pain when it doesn't go my way, visualizing what I do if I take a stop, going through all the different scenarios, which are sort of out. I'm not going to expand these because I don't want to give up my own personal stuff. I have my own personal demons that I'm battling when I take trades like this. And so a lot of that stuff is kind of personal, but it's important to outline those things, so that in the moment I have a place that I can come back to and be like, what was my plan? I need to stick to my plan, because the difference between somebody who can trade and a great trader, I believe, is not how much money they make. It's how they adhere to their plan. And so I'm being very clear on what my conditions are for entry. I'm being very clear on what I'm looking for exits. And I'm going to do my best to not even consider my P&L or look at it at all. I'm just going to be watching the charts, just trading the price action, waiting for my conditions to be met, and taking action when the plan tells me to. And I'm super excited for this to happen again. And I can't honestly wait. I got to temper my excitement, because I think anytime we get consolidation like this and panic starts to enter the market, that is an opportunity. And so I've proven to myself now multiple times that I can do it, and I'm going to try again, and I'm going to use more size than the last time, because that's how you improve at trading. You just keep doing things that are working better with more. Okay. I hope that wasn't too much. It's a little different than my normal content, but I think, for me, it's completely what's top of mind for me right now. I actually didn't even trade today. I spent my whole day just looking at charts, building out my plan, starting to write out my visualization plans, my mindset plan, I wrote that indicator today, and I'm literally just preparing myself for when the time comes to do the right thing. So that's it for me. I hope you guys have a great week trading, and we'll see you next week. Hey, if you like my indicators on TradingView and you like the content I'm producing here on this channel, please remember to like and subscribe.